So I've just put up behind me to try and compete with Neil. I've put up local sites in Battle. I live in Battle 1066, and just over my shoulder is Battle Abbey. So this was the last time Britain was conquered. Now, as Neil has said, I'm a financial person, so I'm going to approach things from that angle. And today, by very good chance, of course, is Private Finance Day at COP26. And one of the things that has struck me as I've listened to the news today is all these calls to halt new financial support. Well, actually, no, to be very precise, call to halt financial support for new oil, gas, and coal projects. Now, this is very, very important. For instance, Chancellor Sunak, our Chancellor, has said that there's now 130 trillion, not the old billions, but trillion, that's real money, of private finance waiting to be deployed in the transition. And that's coming from 450 firms, which represent fund managers, represent 40% of global assets. So this is a big, big number, very significant. Now, remember that the Paris Accord a few years ago says that financial flows should be consistent with a pathway towards lower emission. Now, I must say, as I've been listening to all these things and reading all the stuff around it, I'm quite concerned that this pathway might in fact turn out to be a bit of a pathway over a cliff edge. So we need to be very careful about that. Now, I want to just discuss the impact on the financial system of a rush, which might become a cliff edge. First of all, if you've got a pension fund or a life insurance policy or whatever, the shares of some of these energy companies will be in your portfolio. You may not know it, but they will be, I can assure you. And companies like Shell Oil and BP, they are amongst the largest payers of dividends in your pension fund. So if these companies get a big hit to their activities, the income available to your pension fund will go down. Now, the other point about this is what happens when the 130 trillion crowd, if I may call them, what happens if they don't roll over the loans, their loans to
listening on to today's debate in stony silence.
Somebody,
the very man at the centre
on not mute. Oh,
somebody mute themselves there, thank you.
Muted, Graham.
Graham, can you stop, please?
Graham.
Right.
Good.
Have I come
You
back?
ended up muted along with the other noise that we had, the background noise.
Okay. Right. Shall I just?
So I think Aidan will mute everybody and then unmute you special on your own as a single.
Special favor. Right.
Oh, yes.
Okay. Am I unmuted now, Aidan? Okay. I'm going to assume
Aidan?
yes. Right. Okay. So off I go again. I'm not quite sure where I stopped. Anyway, let me start here. What happens when the $130 trillion crowd will not roll over loans to energy companies? The answer is that some of those companies will go bust because they've got long-term projects which they need, like your mortgage, when it rolls over, they need to roll over the mortgage. If you can't replace your mortgage and pay it off straight away, you're bust. And so will some of these companies. So the risk is that the impact on the banking system will be quite severe. And the moment we start getting banks having very big loan losses from the energy industry ceasing to pay and going bust, or some parts of it, then the result of that inevitably, as we've discovered in these various crises recently, means that they will reduce the loans they make to us, to other companies, to mortgages and so on. So that's a big, big problem. So that's why I say we need to be very careful about these spillovers, which we can't foresee. There are potentially very big economic consequences. So don't rush. Take a measured pathway to where we want to go to. We all want to get there, but take a measured pathway, no jumping over a cliff edge, because there are dramatic unforeseen consequences. Now, let me finish just by talking about Brexit for a moment. As anyone who knows me knows, that's one of my abiding things. The Brexit reason. Now, today, our Chancellor Sunak said the UK would be the first net zero aligned financial centre. Now that sounds grand, doesn't it? A nice ring to it. You'll see it on the news. But this is a self-financed, self-policed measure. And a number of people are already saying, even today, that actually this is, and I'm going to paraphrase it slightly, a bit like the rules which apply to Owen Paterson. If they become inconvenient, you don't need to worry about them. I'm sorry, Mr. Paterson, but there we are. Now, so that's what we're doing. We're just starting out on this, and we're saying we're going to force UK companies to report on their exposures to carbon and how their pathway is going. Now, what is the EU doing? The EU has already got in place a series of measures, a series of regulations to force companies and banks, for that matter, to say what they're doing and to report with a taxonomy which says exactly what they're doing, standardized rules, so as investors, the 130 trillion crowd, know precisely what is actually being said and done. And it's not just all greenwashing and mumbo jumbo, it's precise, legally verifiable stuff. The European Central Bank, which is the supervisor of Europe's banks, they're already doing a climate risk stress test for the banks they regulate. So the EU is underway doing stuff, and we in Britain, in the UK, having Brexited, we're going to find ourselves a second-class citizen. Now, does this matter? Who cares about bankers going a bit hungry and what have you? I suspect a lot of people on this call will say they don't care at all. But actually, you should care, because the city produces, and I use that, the financial system of the UK provides about 10% of the tax revenues of the UK government. So there's a serious hit to that. If it halved, let's be clear, if it halved, which is probably an extreme example, if that were replaced by a rise in income tax, the standard rate of income tax would go from 20p in the pound to 28. So this matters to everyone on this call. To replace those lost tax revenues is a big problem. And if they're not replaced, that's half the funding of the National Health Service disappears. And this is the Brexit impact. We could have been the green capital of Europe, without a doubt, and the green capital of the world. But with Brexit, we've thrown it down the drain.